Okay, good evening, everybody. Thank you for coming to this pension meeting this evening. Before I start, are there any apologies for absence?
Yes, Chair, I have two apologies. One is going and Union Rep and Emma Price from Pensioner Rep. And as you know, Caroline Holland is no longer with us, but Roger Kersher has taken over the Section 151 officer. He will be joining us shortly.
And right, are the minutes of the previous meeting correct? Anybody, any comments on them? Agreed. And quarterly performance review. Namashe, are you giving that?
Thank you, Chair. This is the quarterly performance report for the quarter ended June 22. And this is the second quarter, probably we're seeing a fall in the fund value after a long time. And so in the quarter, the fund value dropped by 86 million. Again, the reasons are relating to the Russian-Ukraine war and also instability in the global market. So what does this mean? In the 3 months to performance, we expect the fund to come down by 5.9, but actually the fund dropped by 9.1, showing negative performance against the benchmark by 3.2. And the 12 months results again is showing about 9.4 drop down, and the annualized, and for the 3 years it's showing about 1.2 against the performance. So because it's the quarterly performance, probably it will be best to wait and watch how it is performing. And there will be a more detail on how the market react to the recent events, the mini budget, and also continue over the Ukraine war will be discussed in part 2. The one point I just wanted to make here is you will see a new investment manager, which is our social impact manager, Henley Investment, who we appointed in March 2022, and we have started investing with them. They drawn the first call of capital. So that's the only change. And nothing exceptional to update in part 1, unless anybody have any question, happy to answer.
Thank you, Chair. Thank you, Namashe. Obviously, noting the, relatively new to this committee, so noting the what seems to me significant, fall in the overall value of the fund of so 85 million pounds or 86 million pounds in the last quarter. Obviously, and understandably, part of the explanation for why that may have been will be due to events in Ukraine and the market's reaction to those. But obviously, I'm bearing in mind that this report takes us up to June, and as you say, there have been further market significant events since then. And so I suppose kind of my thought reading this was, we're reading now in October, obviously it was meant to be September, but in October, the report for the quarter, the quarter to June numbers, and it just seems improbable that the situation hasn't changed dramatically since then. So I kind of wonder why it is that we're sort of seeing these numbers, so a whole quarter later. And I wonder if there's something that we can do to have a bit more timely sort of oversight of the fund's performance going forward.
Thank you for the question, and it's a very valid question, especially what's going in the market, which is changing by the day. The public market valuation will come probably in the first five working days after the quarter end, Councillor Christie. But the private market, they take the valuation very long time. And also the investment consultant who is putting through the report have to go and assess not only the performance and also the further development with a particular investment as well as the fund manager, and it takes time to report. And knowing this, and especially what's going on in the current market, so we have managed to get an estimated value of the September one, which we'll be looking to detail in Q2.
Thank you, Nimesh. And if I can just sort of follow on from that, I suppose, again, relatively new to the committee, I suppose my general understanding about the management of the council's pension fund was that we were looking for, more long-term and relatively secure investment. And so my, I suppose, perhaps naive but general understanding was that the fund's performance wouldn't be so affected by the sort of day-to-day, market events. And so I suppose that's why, again, I was surprised about the impact on the fund from events and we're saying it's related to the aftershock of the events in Ukraine. So I just sort of wonder, is there are we not taking such a long-term sort of secure investment view, or are we actually taking an approach that is more susceptible to market events?
I know Nick is waiting for a response. I'll give a quick response and I'll pass it to Nick and he will add something. Yes, pension fund take a long-term view and probably we look for 20 years. And so one of the classic example I can bring about it was when the COVID hit on the same quarter, the fund dropped about 100 million and it did pick up, but it was a quite shock and it was able to recover. But with the Russian-Ukraine war, it's taking long time. And also from the pension fund point of view, yes, 3 to 6 months is longer, but obviously we look even more longer period. So the expectation is in about between 1 to 3 years, the fund performance will out all this quarterly deviation and we will get the expected return what we are invested for. And I'll pass on to Nick here something.
Yeah, Councillor Christie. So I'm sorry to introduce myself. I'm Nick Yalamer, the lead investment consultant from Hymans Robertson. So in short, on your understanding, Councillor Christie, we are still pursuing an investment strategy for the fund, which has a relatively high risk set of investments. The reason why we need to do that is because in terms of in terms of funding all the benefits that have been built up to date and in future, we need to balance some of that cost in a way being coming through from contributions from employers and what have you, and from investment returns. Okay, and the way we sort of are thinking about funding the costs means that our investment strategy needs to deliver a prudent investment return of about 4.5% per annum in the long run. And therefore, we have set up an investment strategy that is pursuing in the region of 5.5% to 6% return over the long run. And the truth is, with an investment strategy pursuing that level of return, you are going to be susceptible to movements in growth asset markets, particularly equity markets, because we have a big exposure. So from one quarter to the next, there probably will be fluctuations of the sort we've seen in Q2. And as Nimesh mentioned during sort of the early parts of COVID, very volatile in terms of the asset values. But we need to sort of look past that and expect a good level of 5-6% return in the long run. Okay, but we ultimately can't fund benefits, with a low risk investment strategy. We have to just accept that investment risk is a necessity for funding the pension scheme. Okay.
Ask, in view of the last few months and the volatility of the market, how do you see the next quarter results looking?
Can I pass this question to Nick? I know Nick, you prepared something, probably give an overview, probably more detailing part.
Yeah, I might, given we're still in part one of the meeting, I'll sort of keep my comments fairly brief. As Namashi said, the liquid investments we don't have any updated asset values for those, but we'd expect them to be pretty steady over the course of sort of end of June to end of September. On the liquid assets, we've got equities, bonds, and a few other bits and pieces. Those have not fallen in value very much at all. And my estimate of a total asset value at the end of September would be about 825 million, so about a 2% drop. So that is very much sort of approximate, but that's sort of the level of drop we will have seen. Okay, fairly modest in what has been a pretty torrid quarter. The main reason the drop has been modest is that actually a lot of growth markets, or equities particularly, have been fairly sort of resilient and stable in that 3-month period. We've been helped by sterling weakness. Okay, and actually the part of the market whose values have dropped very significantly in bonds, particularly government bonds, we have a very limited exposure to those. Okay, so actually I'll expect that the Q2 returns in terms of the fall in asset value have been very significant. Q3 much less so.
Is there any other business as we go?
There's nothing to discuss in the EOB.
I've just seen here future meeting dates as the next agenda item.
Mhm.
Was the meeting in December being brought forward to November? Yeah,
I'll amend that one. My apologies for that one. It will be on the 17th of November.
we exclude the public, so to resolve that the public are excluded from the meeting during consideration of the following report on the grounds that it is that they are exempt from disclosure for the reasons stated in the reports.